Welcome to the Experienced Focused Leaders podcast. I am privileged to introduce you to one of our mentors at Relayto and friends, an investor, but really just a cloud pioneer that we're privileged to have occasional chats with. And we wanted to share the insights from one of these chats, just like you're hearing almost like an inside track here with Steve King. Steve is a former CEO of DocuSign, but really a five-time CEO with many exits to boot, and now sits on boards of exciting companies. But I think without further introduction, Steve, tell us a little bit about your background and how you've come to pioneer a few cloud-based solutions, not just one, especially in the enterprise content space.
Well, Alex, it's great to be here. And you're right. I am a friend of yours, of course, and Relayto, and really been excited to watch the progress along the way. And we'll continue, to be on the sidelines, rooting for success, which I am absolutely convinced will come or is coming. Boy, I've been in Silicon Valley a long time, so I'm not sure how far back you want me to go. But, I moved here from Seattle back in the mid 80s because I wanted to be a part of this. I was reading about, the emerging companies in Silicon Valley. And in particular, I was in kind of content and managing content and was excited about the idea of taking this paper content and converting it into digital form so it could be more easily managed and information could be retrieved much more easily, and the power and the knowledge in that information could be leveraged more easily. And I was with a company called Ziff Davis, which still exists, and at the time it was owned by the Ziff family, and they were in computer publishing and also computer magazine publishing primarily, but they were experimenting with online information distribution. I wanted to be a part of that, and came here to Silicon Valley. And ultimately, what really propelled my career was leaving them after they were acquired by Thomson, which is now Thomson Reuters, and joining this quirky little company in Palo Alto called E-Trade. And I had some friends
traded on it. Thank you very much.
Yeah, I've had some friends who have who'd left, Ziff and had joined them, and were trying to desperately to recruit me to do, strategic business development. I said, why do I want to work for a broker? I'm not a financial services person. They said, no, you don't understand. This is a pure play internet opportunity. So this is in 95, 96. And I met with the CEO, Christos Katsakis, who is this very charismatic entrepreneur who really kind of repositioned E-Trade into a technology company. And he had me convinced in 5 minutes in meeting with him that this is a great opportunity, I should join. So in the 4 years I was there, we grew from a couple hundred employees and 50 million in revenue to 5,000 employees and $1.5 billion in revenue. And so it was a pretty chaotic time, but it was right in the middle of the dot-com bubble. And because it was so chaotic and growth was exploding, there were lots of opportunities if you wanted to raise your hand and take on additional responsibility. So, I'll kind of fast forward through the first 3 years, but the last year I was asked to take over an E-Trade Ventures company called eOffering, where, by this time we were pretty full of ourselves with how we'd really disrupted retail trading, and we were going to do the same thing with investment banking. Well, I had no investment banking background, but I was asked to sit on the board of this investment that we'd made, which was supposedly going to get us into investment banking. And anyway, again, short version, it wasn't going very well. And so they inserted me as the CEO. So I was the accidental banker, investment banker. And then I was the accidental CEO. I had no intention of being the CEO, but somebody needed to come in because E-Trade had made a substantial investment and they were not managing it well. So, I jumped in and that really was my first CEO opportunity, and I learned a lot, made a lot of mistakes, but it was a great experience. And we ended up selling that to our primary competitor. And at that point, I moved on, joined another technology company, because I was ready to, at that point, build something again. And E-Trade had made an investment in this company called Xantes, which was doing archiving of important documents that were being created digitally or converting paper to digital form, and then storing them in the cloud. Although we didn't call it in the cloud back then, we call it on demand.
Right.
That was a very
that was the buzzword. That was the first version of the cloud, right?
Exactly. Or as a service storage service provider was another term, but we didn't want to really leverage that because we were more than storage. We had this smart platform to manage documents of all types. However, as the air was coming out of the .com bubble, because this is late 2000 when I joined, we realized very quickly we weren't going to be able to raise any more money, which was really easy to come by up to that point, and that we needed to ensure that we had enough runway to prove we had a beachhead market. And the beachhead market we chose was archiving email for financial services firms for compliance. There was no real defined market. There was no analysts, Gartner wasn't.
There's no Gartner reports. No
Gartner report on that. But having come from financial services, I knew that there was a requirement to do this. And we happened to get a little bit lucky and had some tailwinds, so headwinds converted to tailwinds when things like Enron and WorldCom, the global settlement, the investment banks on Wall Street, where they were pumping up certain stocks, to get more business, basically, because the simple way to describe it. And all of a sudden, the SEC and the regulators and law firms realized the smoking gun in these cases seemed to always be in the email. So these financial services firms were very motivated at that point to get something in place, and we had. One of the advantages of SaaS today is the ease of implementation. Everything's managed by somebody else. You don't have to build infrastructure. And we had basically done that, and we had optimized for large financial services firms because our largest customer was Citigroup. We only had a handful of customers, but the largest financial services firm in the world at the time was our customer. And we had optimized our platform to scale to that level, and we became one of the only games in town with a purpose-built platform for high volume email archiving, where you could actually retrieve with accuracy the emails in the case of a regulatory investigation or a discovery request. And so I spent 7 years as CEO of Xantes, and we ultimately did sell that business as well. And from there, I decided to take a little time off, and
so that's amazing. So that's the Xantes story is sort of like one of the first cloud successes. Ultimately ended up a huge multi-hundred millions dollar exit, and then ended up ultimately as part of HP. Exactly. HP, and I think one of the things that I find interesting is that was probably much harder, right? Like right now, SaaS is known. People are comfortable. You don't need to justify the model, but here you're selling to financial institutions, really conservative. Thank God you were a former investment banker, quote unquote, right? But it's like it must have been tremendously challenging to go and kind of pioneer a solution in an unknown category to such conservative institutions. What do you think kind of allows you to succeed there and bring this company from the brink of collapse to such a early success, and being kind of a leader in the space effectively?
Well, there are a number of factors. First, we had a management team who believed in what we were doing, and I still look back on that to this day in awe and wonder about how the team was so committed and believed so much that we were on the right track. Two, our customers were the largest, our initial beachhead customers were the largest financial services firms in the world, and we had access to senior level people in the technology groups who were telling us we were on the right track. And then, as they said, we see everything, right? We have an opportunity to evaluate every technology there is, in essence, that's relevant to financial services. And we can tell you that what you're doing is unique. First, it's in the cloud, but two, you've created this infrastructure to scale. And as long as you can scale, then we're going to have a mutually beneficial relationship. But the second we believe that you can't scale, you've hit the wall, then we're going to have to look for alternatives. So we're constantly motivated to improve our platform to scale with the largest financial institutions in the world. And we got a reputation, and we became known on Wall Street as the go-to solution when you didn't want to build it yourself. But the other thing, though, that made it hard, it wasn't just convincing the customers, it was actually building it in a reliable way. I mean, you don't have the infrastructure that you can rent, like AWS or Google Cloud or whatever. Today we were speccing and building our own hardware, believe it or not, and establishing our own data centers. And it was a very capital intensive business and very, very hard to manage. And our customers recognized that as well, and they gave us credit for the fact that we were doing a reasonably good job, and that's why we were able to grow the business the way we did. Now, we eventually went to adjacent markets like electronic discovery, for the legal field. That was a big market for us. We saw that was a natural adjacency, and we ended up making acquisition to accelerate time to market, and get into that market quickly. And we had customers who prospects who said, no, we'd never do this in the cloud, who eventually became customers once they realized how hard this was to do. So we had market factors that shifted into our favor. We were the only one that was doing it the way that we were doing it. We were building to scale, and we had proven that we could do that.
Well, this is fantastic. So we've fast tracked to another CEO gig that you've done that's near and dear to our heart, and most of our audience knows DocuSign really well. There's a lot of interesting nuances that you and I were talking about of what made you realize that DocuSign had an opportunity before the rest of the market did, right? Yeah. And it was sort of, you took it from a very rough and unproven space, was a really interesting technology to really kind of establish initial market leadership. So guide us a little bit on that journey. What helped you, see the potential in DocuSign, and how you've restructured the company to really innovate on the go-to-market, not just pure enterprise, but I think you really were pioneering bottom-up and enterprise approaches at the same time. And I think that would be really fascinating kind of for anybody going to first principles to understand who were the first companies doing it, what were the challenges, because when you're trying to do it yourself, sometimes I think we get too caught up in looking at the latest examples, but I think you really learn the most from the people like you who've pioneered a new go-to-market model.
Yeah, well, great question. And as we were talking about earlier, there's an E-Trade connection there as well, and also a Xantez connection. First, the E-Trade connection. And when I was first approached about the CEO opportunity at DocuSign, it immediately clicked for me, because at E-Trade we were big proponents of the idea of electronic signature, because the way we were growing is opening accounts as quickly as possible, and we knew that if we could automate the signature process, because from opening brokerage accounts or bank accounts, there's a lot of documentation and administrative stuff. Well, we lobbied the state of California to pass to make electronic signature legal. Well, that's great for California, but if you've got customers in Texas or New York or wherever, and the law does not apply to them, then it's really not really that relevant. So it turns out that law was then used as the template for the federal e-sign act, which passed in 2001, I believe. And so, I was approached about the DocuSign opportunity in 2009, and DocuSign had been around for a number of years. And there were a couple of other companies that were also trying to make a go of it in the e-sign space, but no big companies, no Gartner research on e-sign back then. And so I got to thinking, maybe this e-sign should just be a part of something else, bigger application. And I was able to do some research and use the product and talk to the management team, and ultimately was convinced there is a market here. It was just being done the wrong way by the early incumbents. I mean, some of the early entrants into the e-sign market were actually building on-premise solutions, which are just imagine how cumbersome that would be to try to manage the e-sign process. And DocuSign was really the pioneer of doing it. There were others, EchoSign, which was acquired by Adobe, but DocuSign was leading in terms of product development in the cloud. And I was convinced that, there's a market here. And this is where the Xantaz connection comes in, because in the early days of Xantaz, there was no market study, no Gartner research. In the early days of eSign, there was no Gartner research. There were some analysts who were curious, but none that were really sizing the market. And then, fast forward 10 years and it's a multi-billion-dollar market. So that was really, what propelled me to accept the offer. And then once I got, into the company and started to evaluate what was working and what wasn't, my playbook coming from Xantaz was the big enterprise
stuff, right?
Sale. We had multi-million-dollar customers there. But I started to look at the landscape, not just at what EchoSign and other e-sign companies were doing, but also what Box and Dropbox and other, what I call SaaS 2.0 at the time, what they were doing to go to market. And I really realized that that's what we needed to change. We had some false starts before I got there in the go-to-market strategy, but what was really working at the time was that kind of mid-market, what Salesforce called, probably still calls commercial. And so we readjusted the investment that we were making we had this high-low strategy, we called it, but it really to push more resources down into commercial and even self-serve, and reserve the enterprise sales motion for the opportunities that were obvious, that were true opportunities. Whereas before, we were trying to cultivate the enterprise market when it was probably too early, when we were having so much success or relatively speaking, success in the commercial market. Why not invest more there? So that's right.
So you changed the playbook from, even though you had some traction, you probably had a few early wins in the enterprise. And then you said, but it's still a lot of hard work. It's hand-to-hand combat. And here we have momentum, we have happy customers, we have viral capacity built in. By the way, we're sort of seeing some of the same patterns ourselves. And then it's like, okay, well, how do we make, if we work with this mid-market segment, it's going to keep us disciplined and make the product even more amazing, probably, right? And so then it will help us eventually in the enterprise anyway, when we do get there. And so you're conserving your resources, you're focusing the business, but there must have been a big change, right? Especially at the time that was totally unproven. And I would imagine every VC in the land was thinking enterprise, big deals, big deals. So what kind of gave you what were the tools that you had and the conviction that you had, especially given your past success in enterprise, right, in making that call? Is it just the data? Is it a belief that you had to be different?
Yeah, by that time we had, we built a management team, we'd filled some holes that existed, and, we had a CMO who really took the lead in developing a strategy, working with our board, board members and other outside resources that we could tap. And so we didn't kind of, hey, wake up one day, this sounds like a good idea, let's go do this. We put work into it. We let the data, drive our decision making. And, we analyzed past history in sales and realized that, that this is our growth engine. And long after I left, the growth engine continued to be, that mid-market where there's less friction, lower customer acquisition costs. And the other thing that DocuSign did, and then this has just been put in place before I got there, and we continued to leverage it, was a beachhead market in real estate. Mm-hmm. And again, referring back to Xantas, our beachhead market is financial services. We knew we wanted to go beyond financial services, but we needed to prove that we had something that could scale, that provided value, customers would pay a lot of money for. And with DocuSign, that being in real estate, in addition to, it's a horizontal platform, it's used by every industry you can think of today, but having that association with the partnership with the National Association of Realtors and having them as an investor gave us an endorsement. The other thing that we did very quickly is we put a partnership together with Salesforce. Mm-hmm. And we became a premier partner. They became a customer. We had some early wins with their sales team, and that also helped fuel the business.
So you had kind of a combination of a horizontal platform with some kind of trying to tap early innovation, early adapters horizontally, but then at the same time, you still, I think DocuSign still has specific solution for real estate if you go to the site. So that kind of, and I think there's some markets where people expect that they're unique or they're large enough that there is a specific solution to them. So that's the beachhead. Got it. Now, one of the stories that you told me that's interesting is, and we get, people are coming in, M&A opportunity, this, bankers coming, pitching you, etc. all the time. And you got pitched to acquire one of your competitors. And I think a lot of people don't really know what's going on in these situations and, what's the thought process, kind of why do you invest? Why do you not invest? Like shed us some light. It's a pretty well-known, probably part of the market. And EchoSign is the company that I'm thinking of. It's now past history, so there's nothing sensitive in there. And it would be good to get a little bit of a perspective of a CEO of a potential buyer, kind of how you're thinking about that opportunity and how do you think about it now from the perspective of go, no go decisions.
Yeah. I'll keep it high level. I don't want to share too many of the nitty gritty details, but at Xantas, we actually grew our business organically, but we also did 4 acquisitions when I was there. And at E-Trade, my job, there was strategic business development. I was responsible for the first 2 acquisitions the company did. So I'm familiar with M&A as a way to grow, and so always open to those kinds of opportunities. But if you're going to evaluate that, first, doing a private to private deal is really hard. It is really hard. Establishing relative valuations and where you're going to get the capital. Will the other side take your equity? Or are you ever going to be able to negotiate relative valuations to make it work? So we explored that opportunity, and I believe there are a couple of things that have to be in place for something like that to work, because it's so hard to pull off. One, there's got to be obvious synergy, but when I say synergy, not well, we can cut this cost. It's if we put these 2 companies together, how does 1 + 1 = 5? And if it isn't really clear, if it isn't going to get you to market faster, plug a product gap, add substantial revenue, get you into customers that you aren't into, if you're just doing it to take out a competitor, you give up a lot. at DocuSign, we were not really in a position to give up a lot back then. And
just to kind of for other folks, like I'll share my experience. So at Success Factors, I was screening out. I was at some point in charge of competitive analysis. I was screening out who would we want to buy, and so we had a criteria in terms of is exactly what you're describing. Is this addressing a customer segment that we are not in? Is this addressing a product category of some kind that we're not in? And is this addressing a geography of some kind that we're not in, especially as you kind of started scaling up an enterprise? And it was really pretty amazing if you could have had something, right, that was sitting somewhere in Europe or Australia, right, and happened to have kind of some global presence and validations, but you could kind of blow it out as a kind of across your geographies. It's a new product capability, and you might acquire it at a discount, and then by the way, it helps you address a new persona of a customer or kind of some larger customers in the vertical that you haven't addressed before. So that sort of mind process, I don't think it really gets very clearly covered in the press. When people talk about acquisitions, people get caught up in the buzz of it and the excitement and the multiples and so on. But it sounds like that's kind of the methodical approach that you were applying in your analysis as well, right?
Exactly. And ultimately, you have to have the belief that if you don't make the acquisition and one of your large competitors does, or a large incumbent who wants to enter the market does, you have to be convinced that you can compete. And at Xantast, we competed with every large technology company on the planet in that archiving space. Ultimately, we competed with IBM, even though we had a partnership. We competed with HP. We competed with EMC. We competed with others, that I can't even think of right now. But we were successful, and I believe that if you're going to sell into enterprise, sell in B2B, you need to have a plan, a strategy for how you're going to outmaneuver the large incumbents, especially in the beginning while you're establishing your market presence. And at DocuSign, we were convinced that we had a much better product. We had a bigger customer base. We had we weren't going to acquire anything that was so unique that it was worth giving up a lot of our equity and consequently dilution to our investors, to acquire it. That we believe we're going to go out and compete and win. And if you fast forward to today, DocuSign has 70%. I don't know, last time I checked, which was quite some time ago, but 70% market share by some estimates. So DocuSign was incredibly successful in competing in that market with others who were bigger. And ultimately, that's what that was our conviction and why we decided not to move forward. And it wasn't a unanimous thing; it was controversial. But we really, it was not something that we could afford to do at that price, at that time. And ultimately, I think history has shown
proving you're wrong, right, on that situation. And I think the other thing is, like, if we look today, right, like we definitely would think of DocuSign in the enterprise world, right?
Oh, no question.
Like,
sure.
So it's really interesting that you had to pull back, right, and kind of focus on that motion where there's traction. But that was a temporary decision, right? It doesn't mean that you said, hey, no, we're not doing enterprise. Obviously, now it's probably a bigger driver of the revenue now, I would imagine, typically in mature SaaS companies, these enterprise things, right?
You're absolutely right. The long-term strategy is to own the enterprise. The winner in that market will own the enterprise. But is the enterprise ready? Are we should we use more of a bottom-up approach as opposed to trying to force it top-down? And a lot of companies, I'd like to say that, oh yeah, we had this brilliant idea, but you can just look at how Salesforce built their business, and a lot of other SaaS companies that are public today started off with a freemium version and selling to individuals, and then bundled those into departmental sales and ultimately to enterprise sales. And DocuSign followed that playbook.
Well, I always feel I love chatting with you because you have this pattern matching. And by the way, folks may not know, but Steve, we met Steve through Alchemist Accelerator, where we were fortunate to have you as a CEO coach, and then later you decided to invest after seeing all the awards, which is great. But you've kind of had this openness to look, you got to experiment and find where you fit best, right? And then when we met, we were just tech-enabled service, effectively, like trying to like nailing a problem that we found in the documents and presentations world. And I'm just curious, like when you look at companies either like us or others, like where do you how do you pattern match, whether it's for investment or yourself, or how do you pattern match, how do you guide these companies to towards that niche, to what you found was DocuSign, right? And when it's all murky, right, there's like pockets of success here, pockets of success there, and you kind of help them find like what's going to be your beachhead, and encourage experimentation versus like, okay, this is our model and that's it, right? Like how like what's been some lessons learned from coaching and mentoring CEOs now that you're kind of in that, play more of that role rather than being it yourself?
Yeah. I've worked with a lot of other companies, that as an advisor, board member, who have gone through that process as well. And it's, for me, it starts with thinking about, I'm reluctant to use strategy or strategic planning, especially for startups. But you do have to think through, where do you want to go? Where do you want to be in 3 years? If everything goes close to perfect, execution wise and market factors that are beyond your control, but assume that the markets are stable. Where do you see yourself in your company in 3 years? And we went through that exercise at DocuSign after I got there, and it was really enlightening to hear everybody's view on where we thought we could be if we executed well, or better than well, excellently, and how aligned we were. Once we could spend 2-3 days in an offsite talking about this, and then, but once you've kind of set that big goal, you have to back it up and say, okay, now what do we have to do this year to stay on the path to that goal? What do we have to do this quarter? What do we have to do this month? What should we be doing today that's going to keep us on the path to achieving this big goal where we envision ourselves to be, where we'll create a lot of value out into the future? But you need to constantly revisit that. So I had a process that kind of learned this at E-Trade when I was general manager of a business there that we formed through 2 acquisitions. But take the time to think about that, and then revisit it every 6 months with your management team to see, have things changed. What have we learned in the last 6 months?
Right.
Are the market dynamics different? Is this really the right strategy or should we be doing something different? And if you do that religiously and you stick with it, and then you build your planning and goal setting around that, it becomes, I wouldn't say easy, but the path is more clear, and it makes it easier to pivot, because you're saying, okay, this is what we thought. Our assumption, it was best assumptions we could make at the time with the data that we had. We've learned some new things, so we need to shift. This may either accelerate us to get to where we want to be in 3 years. It may delay, but we're going to continue to make progress. And I know it sounds a little esoteric. I don't want to jump into the the nitty gritty. I don't think we had time for that, but starting back as general manager of a business at E-Trade, and then every other company I've been a part of, even as a board member, I've encouraged the management team to do something like that. And it really it works. You know, it's simple. I call it strategy as a process. It's not strategic planning, you know, a big 5-year effort.
You're not
You
doing
bring in
like some
consultants to handle it.
five-year
You do it
plan.
yourself.
You do
Yeah.
it yourself, but you kind of place these like explicit markers so you know, hey, we thought this was our, and I think that's really, it's like something that jumped out at me. I think that, you know, really benefits everyone, for everyone, because I think it's almost life, right? Like, you know, you're not like an inherently evil person because you thought something, you know, or messed up person because you thought something, you know, 6 months ago that's now completely wrong, right? Like, you kind of knowing what we know, knowing who we were back then, being, you know, us being who we are, the market being what it is, this was our kind of worldview, right? Rent was this review, and then like 6 months in, here's what we learned, and things have changed. We've gotten smarter, the market changed, we've canceled some hypotheses, we've raised new questions. So it sounds like this is almost a manual for life, right? It's not, you know, like, it's not a manual like just for the startups, because, you know, you kind of need a big vision for what are you going to do with your life, right? But if you hold yourself to a goal that you were, you know, in like a 13, that you wanted to be, you know, an NBA player, and just the height setup didn't work out, right?
Yeah, right.
Well, let's just say that, right? Then, you know, how do you readjust that, right? Like, how do you stay tuned, like, to maybe the global important themes that are important for you, but the realities change, you know, maybe what you like changes, right? Like, maybe what your team is passionate about building also could be changing. So it sounds like you're providing a natural course correction method here, but still some structure along with it. Is that kind of
I
the
think
way
that's
you're
a good way
seeing
to
it?
describe it. Yeah.
All right. So any other tips and kind of good things you see, and like traps that you see for anybody trying to build something new? Because I think you have really unique perspective where you've kind of, you know, build business units from scratch, but still also like in the early part in particular operated within the larger structures. And so we at, you know, in the podcast, you know, in general, it relates to, we appeal to people who want to create meaningful change, people that want to create, you know, create and bring to market new products, launch new campaigns. And to do that, they need to take risks. They need to get other folks on board you know, the joint vision. So what are you seeing of the kind of, where do people succeed with this? Where do they fail? Where can lessons be taken from startups to corporates and vice versa?
Yeah. Also a great question. And I think for me, what the first thing that comes to mind is surround yourself with great people. And it sounds like a cliche, but the reason it's a cliche is because it's so true. You know, you need to be self-aware to identify where your gaps are and make sure that you're bringing in people who are complementary, you know, to your skill set, who are passionate and committed to the vision that you have as you are, who can articulate that vision as well as you can. And, you know, as an investor, I make, especially, you know, when I was making really early stage investments like Relayto, a big part of it, probably more than 50%, is the people. Like I invested in Relayto because I invested in you. And
Thank you.
You know, I realized you were a force of nature, and you weren't going to let the inevitable obstacles, big walls that you're going to run into, get in your way. You're going to find a way around them, and that's exactly what's happened. And so you know, again, if you're going to build something great, you're going to have a great team to help you do it.
Well, I'm flattered. I really wish my mom and my wife and my kids would be listening to this podcast right now. This is so the people component, and then like so let's say again, let's take even us, right? Like you were in the enterprise content space for a long time, right? You've seen unshaped categories. How do you combine the people component with the market component, especially when things are early and not proven, and the category doesn't even exist, and the product may not even exist in the way
Mhm.
it's supposed to be down the road, right? There's just this vision. Let's say you have a enthusiastic and empowered individual in charge, but there's still the market component, right?
Yeah.
And so how do you think about that, and maybe use us as an example? Like, what did you see where that helped you connect the dots twice, right? Because you've invested
Mhm.
over time, that maybe the first time and then the second time, like how do you make those decisions of was your own money, so to speak, on this?
Yeah. Yeah. Well, so the part of this is related to the people part of it, is that you were not sitting in a room with your co-founder assuming what the market wanted. You were
Mm,
talking to anybody you could get a meeting with about what you're doing,
mm,
what your vision was. Then you incorporate that feedback, market feedback, into iterating your product. Knowing that maybe you're not going to be able to to convert your product to exactly where it needs to be, in short term, but over time, you had a vision for where it needed to be based on customer feedback. So talking to lots of customers, lots of prospects, people who are knowledgeable about your market all the time, just constantly interacting with the market is what I've done in the past. When we were at Santas, taking a big leap of faith that large financial institutions would trust what we did. It wasn't that big a leap of faith because we talked to them and they
right.
told us what they wanted, and that if we could meet those requirements, they had a need, and we would be seriously considered, and that's what happened. Same with DocuSign. Let's go talk to the markets and find out what people really need, and let's make sure that we're using that to make our decisions, not sitting in a room waving arms, convincing each other that we have the best ideas. And I've seen that happen. In honesty, that's what was going on at Xantes when I got there. And but it was easy to do during the .com bubble, where just go raise, you run out of money, just go raise more at a higher valuation. But now you got to make that capital last, and you got to build something that customers want and will pay for, and you need to go talk to them and collect that data to let that drive your decision making.
Got it. So what I'm hearing is that especially in the tough markets, where the whether it's the funding from internal sources, if you're a corporate thing, or external, like investors, you don't have that luxury anymore. If you do, it's kind of much more expensive, so to speak. So you need to be more and more customer focused, and so that that DNA in anybody who's trying to break out something new, focusing on the audience, your customers, prioritizing them, sounds like that's obvious, but that's not done nearly as much, because there's a momentum for, this is our technology constraints, this was our original vision, we already did 6 months on the roadmap. Is that kind of the conversations that you have, or like, let's debate the finer points of the products, but forget if people even understand what the product is supposed to do in the first place? Are we even targeting the right people for the product?
Right.
So, and why do you think the people get trapped in this? Is this just kind of they get too in love with their ideas? Is it just natural? Like, I'm trying to scratch my own itch, like I've heard that Steve Jobs did his own things and told the customers, this is the solution, and I'm the next Steve Jobs. Like, where do you see kind of the cognitive blocks that help smart, very capable people, lead them down the astray a little bit?
Yeah. Oh gosh, all of the above, and there I've seen where really smart people just think they've got the answer and, don't necessarily want to be told that they're wrong. And I think, it's human nature to some extent. You don't want to hear bad news, and so you kind of avoid it and rationalize it, and that's the worst thing you can do if you're building a business. You need the unvarnished, hard truths, and then not get discouraged. Deal with the brutal facts and figure out how you're going to use that input to make your product better and find better ways to solve the customer's problems.
I love it. And I think this is sort of your, like, wrapping this up a little bit on a philosophical note, Steve, right? Like whenever I chat with you, like I kind of have a sense that you have this energy and vitality, and it's sort of, you bring that to your family, to folks that you mentor. So how do you, as a leader of companies going through significant transitions, right? As an advisor, how do you, for yourself, kind of build the types of habits that help you kind of deal with the brutal facts, right? And yet, I don't think I've seen you down, or I've seen you like negative in particular. You kind of put things in perspective. And I think maybe that's wisdom that comes with experience. But if that's wisdom, like a lot of younger entrepreneurs, leaders could benefit from that, earlier before they acquired the hard way. What would be your advice and kind of like keeping that balance?
You can't replicate, the years
Right.
and the mileage, that I have. And so I've learned a lot through those many years in Silicon Valley. But the other thing, I thought about this a lot because people have described my personality that way. Other people have described it that way as well. And I think my early career in sales was a huge help because that's how I started. I never thought I'd be a salesperson, but I, was offered the opportunity and, pretty methodical about how I approach things. So I said, yeah, I'm not going to be the flashy salesperson. I'm going to be the one who understands the market the best, who understands my product the best, who understands my competitors' products better than they do. And then what I learned in my early days of sales is don't get too high, when you have some successes, but don't get too low when you hit a dry spell, because you will, just kind of manage it and deal with facts. And, I had a pretty successful career in sales as a result of that. And I just carried that kind of roadmap of life, with me through everything that I've done. And in a way, I always say I like to be in the eye of the storm, not on the sidelines. I want to be in there where I can have some control of the situation and figure out how to make it better, not as an observer. And so I don't know. It's just how I'm wired.
That's amazing. Well, very inspiring. So it's kind of go in the eye of the storm, but stay calm and put things in perspective, whether they're good or bad. Great advice. Steve, it's been, a privilege in general, and especially today, to hear your wisdom. And I hope our audience really enjoys this. Thank you so much for joining us. How can people get in touch? Use it LinkedIn? That's the easiest way to find you.
Sure. Yeah. LinkedIn is a great place to track me down if you're interested in connecting. And thank you. I really enjoyed the conversation, and it's been a lot of fun to kind of talk about the history a little bit. I don't get a chance to do that much anymore. And congratulations on your success. And I'll continue to be here on the sidelines, as I said, rooting you on.
Thank you, Steve. Thank you for inspiring us and helping build definitive cloud companies that now we're trying to emulate as well. So thanks very much, Steve, and best wishes to our audience, and hopefully they could learn more of the stories from DocuSign and Zentaz and apply some of these lessons in your startups. Thanks.